What's up, guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a quick look at two video game stocks. That industry is erupting right now, hitting record numbers, and these are two stocks that are looking very undervalued and can give us some really nice gains in the coming years. So let's not waste any time. Let's jump right in. Alright guys, before we get started today, subscribe to the channel, hit that bell notification so you can stay up to date. We're almost at 1,000 subscribers, so help me out. Hit the bell for all so you get notified when I post. I try to post every day with anything stock related that can help us grow our portfolios. There's a link down in the description to my Patreon account. If you want to be in the day one squad, I think we've got about 10 spots left. You'll get access to the private Discord where we talk stocks. Links to 4 different portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock, up to the second I do it, I send out a notification. Anytime I've got a good stock on the watch list, I send that out so you can follow along. So if that's something you're interested in, if you want to, come join the day one squad for just $1, we got a few spots left and we would love to have you over there. So come check it out. But guys, let's jump in. So back in January, the video game industry hit a record number. Obviously, during the pandemic, when everybody was locked down at home, you had video games just exploding. You had people that used to game a lot that kind of either just, grew out of it or stopped playing or whatever, go back to video games. And then you also had a lot of people that weren't previously gamers start gaming as well. And that's over the course of PCs, and then the new consoles came out, and then you've got streaming. I remember when I used to watch Rocket League on Twitch, and there would be like the most viewed streamer would have, maybe 10,000 viewers, maybe 20,000. And then Fortnite came out and it just erupted the streaming industry. I remember seeing Ninja with like 250,000 people watching him play Fortnite that day, and all these different streamers with 40,000 and 60,000 viewers, and just record breaking. Video game, I don't think, has ever impacted the gaming community like that game did, in the sense of revolutionizing it and bringing it to the forefront and to the mainstream. Everybody knows what Fortnite is. You even had Drake on there playing with Ninja. And so the video game industry, yes, obviously got a bump from COVID, right? Because everybody was locked down. But I don't think that is an up and a down thing. Video gaming has been growing for years and years, even before COVID hit. Now it did get a boost, but you've got augmented reality, virtual reality. You've got ray tracing and AMD and Nvidia and these insane graphics cards coming out, more powerful consoles, and so the gaming industry is going to continuously get bigger and bigger. The streaming industry is continuously getting bigger and bigger, and you've got this these kind of two sections in video gaming. You've got the casual at-home gamer that games from time to time, that is totally fine with just buying a standard console or a standard gaming PC and using standard controllers, regular equipment, right? The everyday average gamer. And then you've got competitive gamers, where every little detail matters, because competitive gaming is coming down to like fractions of a second, like your refresh rate on your monitor, no input lag on your controllers, all of those different things. And then when you get into streaming, anytime that a competitive gamer or a streamer can get an edge with a better camera or better monitor or whatever it is, they're going to take that chance. I did see some pretty insane numbers about the amount of people that were watching competitive gaming, in this date and age. Like people watching esports, competitive online video gaming, has gone up just massively in the last few years, where younger people, Gen Z or whatever, are watching video games more than they're watching actual sports. And so we're going to talk about it today. I'm going to give you two stocks that I think are very undervalued in this rapidly growing industry, and I think we can get some nice gains on them. I own both of them. The first one we're going to look at is Crsr. The second one we're going to look at is Turtle Beach. So let's jump in. First thing I wanted to show you guys was this article I saw. This was back on April 16th, but it says video game sales hit a 5.6 billion in March, another industry record. It says the figure is up 18% from March 2020 with gains in all categories, notable as the figures are starting to lap COVID-19 pandemic comparison and that month's onset of lockdowns. The year-to-date total is 14.92 billion, up 30% from the same period in 2020, according to NPD Group, and the 5.61 billion from March follows a February record of 4.6 billion in overall sales and a January record of 4.7 billion, and then a December record of 7.7 billion and a November record of 7 billion. Hardware was another source of strength with still fresh new generation consoles from Sony and Microsoft streaming out to buyers. Hardware sales rose 47% year over year to 680 million. Accessory sales jumped 26% to 300 million. And video game content sales rose 14% to 4.63 billion. I want to see if I can find I'll have to get back to you on it, but I do know that there was record numbers in the amount of people that were watching Twitch and watching gamers. Pretty insane statistics. I will try to link the article I saw below so you can see what I'm talking about. But younger people are watching, competitive gaming at all-time highs right now, more than sports like football, basketball, things like that. The iGaming is the future. We love skills because skills is that competitive, e-gaming, iGaming, esports platform that you can play for real money. There's streamers out there that are playing video games for a career professionally and making millions and millions of dollars doing what they love. There's competitive gamers out there that are not even really streaming, that are just playing competitive in tournaments and things, that are making millions of dollars. So as more and more kids see that, and as games get bigger and better, people are continuously wanting to become streamers and play video games as a career. The other thing that I thought was insane is, you start looking at some of these graphics cards that are coming out and the ray tracing and the more powerful consoles. It's like, how much more powerful can it get? Eventually, are we going to be using omnidirectional treadmills like Ready Player One? I don't know, but I do want to show you these two companies because I think they're super undervalued. I think we can make some really nice gains here. The first one's Crsr. The stock price is currently sitting at $32.86, up 1.36% today. They have got a market cap of 2.98 billion. Their price to sales ratio is only 1.64, which isn't bad. It's actually looking pretty low when you start considering like Logitech. I would say Logitech is one of Crsr's probably biggest competitors, and they're trading at like a 4.3 or a 4.2 price to sales ratio. So, quite a bit higher than these guys. Crsr also has a gross profit margin of 27.43%, which is nice. An EBIT margin of 9.5% and a net margin of 6%, which is not too bad there. They saw revenue of 1.7 billion in their trailing 12 months, with a 55.16% revenue growth in their trailing 12 months. A net income of 100 million and a gross profit of 466 million. So let's kind of take a look at some of these financials here on the income statement. I wanted to show you how it's just real nice steady growth here. If we look at the income sheets or income statement. So from 2010, look at this just nice steady growth: 379 million, 455, 511, 595, 855, 937, 1.97 billion. 1.097 billion, just under 1.1, and then 1.7 billion in their trailing 12 months. Just beautiful growth. I mean, nice and steady. Nothing, out of control. Nothing just unsustainable growth. Just very nice, steady growth year over year. You can see they're making, pretty nice profit margins. You can also see here on the net income, they made $100 million this year, which, they lost some money in the previous years, which I think there was acquisitions there. Okay, so let's take a look at the projected earnings on Crsr. So if we take a look down here, you can see that in, like I said, in 2020, they did 1.17 billion. They're projected to finish up the year at 1.91 billion, jump that up to 2.04 billion in 2022, 2.22 billion in 2023, 2.84 billion in 2024, and then 3.12 billion in 2025, and then jumping it all the way up to 5 billion in 2030. So if we start doing math and we just take the price to sales ratio between Turtle Beach, Crsr, and Logitech, and we divide it out, we're going to get an average of around 2.4 price to sales, which I think is fair. I think 4 is a little high. I think 1 is a little low. 1.77 is a little low, in my opinion, for a rapidly growing growth industry and growth company like this. So if you take their 2022 projected revenue at around 2.04 billion, and you put a 2.4% price to sales ratio, that will give you a price target of $53 by 2022. So from the current $32, that's looking like some really nice upside. If we take a look at the chart here, you can see it came out and just absolutely skyrocketed right back here in November. Jumped all the way up from, down here at around 18, came up around 25, and then just skyrocketed up to a high of $51. So that price target of $53 is not much past the all-time high that is already seen. When you do a price to sales, price target like that, obviously, it's all based off of just kind of speculation, right? It's like, okay, if, the average price to sales between these three companies that are competitors, this is what it could potentially be, which I think 53 is actually pretty reasonable, seeing how it's already reached pretty close to that. If we take a look at the upside potential from where we are today to $53, you're looking at 61% upside. That's a really nice, percentage that you're going to gain there if you can put it in and hold it over the course of the next 2 years. Then you start getting out 2024, 2025. I can easily see this stock being right up there where Logitech is. I believe Logitech is trading around $113 at this point in time. So very cool company. I think Crsr is kind of a hidden giant almost, because they are doing very well with their streaming. They're growing revenue like crazy. They've got, really nice competitive gaming products. They own Scuff Gaming, so competitive controllers. They've made really nice acquisitions is what I'm getting at, to cover every aspect and every sector of the competitive video gaming and iGaming and streaming industry. They've got an acquisition with ring lights and webcams, and microphones. They've got the Scuff controllers, they've got the monitors, the PCs, the keyboards, the mouse. They've got everything, and they've got some great products. So definitely add this one to your list. You can see, it's even it had a pretty nice base right here. It was trading real sideways. Tried to come back up towards the high right here around February 10th. It had great earnings, so it popped right up, preemptory to the earnings, and then sold off, in the market, that we've had recently. But it looks like it's sitting at a nice support level right here at around the $31 mark. I don't think that that's a bad price at all. I actually entered the other day. I think my average cost was around $32.40, and so I plan on holding it. I think it will do very well. You can see here you've got, a nice foundation. So definitely put this one on your watch list. The next one we're going to take a look at is Turtle Beach. So as you can see here today, trading at $27.42. It's currently up 11% today. I've sent this out a couple times in the Patreon because I really like this stock. I've actually owned this since clear back in November. I think this is a very, very cool company. I love their products, but I also think it's a growth company that has a very solid business plan and business model and is doing very well. They're making nice acquisitions. So I really think that this gives us a nice opportunity and a nice exposure to a growing industry, but is also a growth company that's in growth mode right now. So if we take a look here, you can see the market cap is only $382.29 million. So in reality, you could technically classify this as a penny stock based off of some specifications. I wouldn't necessarily call it a penny stock just because of the nature of the company, but you absolutely could say that this is a penny stock. You can see here it's only got 15.48 million shares outstanding versus the 92 million that Crsr has. So this stock can move. It can be real volatile in a day, but at the same time it's a stable company. They've got nice growth. They're doing really nice things, and so that's why I'm saying it gives us a nice chance for growth. You can see the price to sales ratio just 1.02, which is just really low in my opinion for a growth stock in a growth industry. So that's why I'm saying I think it's looking undervalued. It's not looking deeply ridiculously undervalued at 27 bucks, but it is looking a little undervalued when you start looking forward. It's got a gross profit margin of 37.15%, an EBIT margin of 13.81, and a net margin of 10.76, looking pretty good there. Did 360.09 million in the trailing 12 months and saw revenue growth of 53.45 million with a net income of 38.75 million. Looking good there. So let's jump over and take a look at the projected earning, or let's look at the income statement first. So you can see here, same type of thing, real nice steady growth. Yeah, they've had some up years, some down years, but overall, real steady over the course of the last 10 years. 166, 207, 178, 186, 162, 174, 149, 287, 234, 360. So again, some up years, some down years, but overall moving the revenue forward at the end of the day. This is a much smaller company than Crsr. Crsr is a $3 billion company. This is a $300 million company. So, just to see revenue growth like that is fantastic. Nice gross profit, you can see there. And then when you start looking at net income, really nice net income over the last couple of years. So I like to see that. If we jump over, I think they've also are growing their free cash flow really nicely as well. So you typically take cash from operations minus capital expenditures. You can see they had that acquisition right there in 2019 of Neat Microphones. But if you look over the course of the last, couple of years, not too bad when it comes to free cash flow growth. It's actually looking real good the last 3 years. So, and then I think the last thing we can take a look at is projected earnings. So as you can see here, they did 360 million in 2020, projected to go to 371 million this year, 406 million in 2022, 446 in 2023, 498, and then 547, jumping it all the way up to 882 million by 2030. Now, when we look at price to sales ratio, if we do the same thing we did with Crsr and we use a 2.4 times price to sales, this stock has a much lower outstanding share number, so it's going to kind of throw that off a little bit. But like I said, they're trading at a 1 multiple right now. If we kick it up to a 2.4 by 2022, that actually puts a price target on this stock of $62 by 2022 if they hit the 406 million and we give them a 2.4 multiple on the price to sales ratio, which is a little bit even higher than Crsr's, which I'm okay with. They're doing a share buyback. Like I said, they're in growth mode. They're making acquisitions. They're doing well. As you can see here, just beautiful growth all the way since the pandemic in March of 2020. Came way up here, reached a high of $35.74. Like I said, I did get back in here in November around like the $20 range. It was like the end of November, December. I have added shares since, so my average cost is around 22 bucks. But as you can see here, did kind of start trading off, dropped pretty heavy right here on their last earnings, even though they had a nice surprise of positive 13 cents per share. Tried to make its way back up, got rejected at 30, came back down, tried 30 again, got rejected, and now it popped 11% today. Guys, I really like this stock. You can see here just really nice regression line. If you start even going way back to, to the beginning of the pandemic, just beautiful regression line. I would like to see it pull back a little bit off this big 11% jump today, but overall, with the industry growing, with the revenue growth they've got a lot of things going for them. I actually like Turtle Beach a little bit more than Crsr, but I love Crsr as a close second. I like them both more than Logitech based off the valuations, and I see these stocks, both of these stocks, being $60 stocks in the next 3 years. If you can get in, you can hold it, you can be patient. I think it gives a very nice addition to a growth portfolio because it gives you some value, a little bit of a sound, solid company versus a lot of these speculative plays, and it also gives you an opportunity at some nice growth. So put these on your watch list, guys. Let me know down in the comments what you think about them. I love them both. I own them both. Think they're going to do very well. We'll continue to add them. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come join us at the Patreon. If you want to talk stocks, you can come over and ask me any question you want. I'll talk with you all day. Like the video if you got any value out of it, and I'll see you guys in the next one. Peace.